Hi, Harry here on February 23rd. I have never hated the stock markets more than this right here. These markets are 2 and sometimes 3 times as high as they had naturally been if we'd have had the baby boom into 2007 and then even the technology wave boom into 2019 or 20, okay? This is just off the charts. And how did this happen? I mean, I have put, I think more than anybody out there, a number on it. $27 trillion of combined fiscal and monetary stimulus since the 2009 lows. And of course, that recession would have gone deeper and longer. And then we would not have been over this until another deep recession into 2022-23. That would have been the natural cycle. And instead, stocks are just in the stratosphere. So where are we now? We continue in a more narrow range until something breaks here. And of course, this is the time that something's most likely to break because, as I've been stressing, the Federal Reserve finally, after overstimulating over COVID, had to reverse and over-tighten by 525 basis points. And they're still talking about they may still have to add a quarter because the economy's been so strong, okay? This is the time. We will not see how much this tightening is going to hit until the end of this year into early 2025. Then we'll know how strong the economy really is after the massive stimulus, which is still kind of filtering in to some degree, but now the massive tightening hits as well. And again, I don't see how things are not more difficult, and the stock market's going to have to adapt to that, okay? Between now and that reality, in the next several months or so, we're in a trading range, I would call it, in the NASDAQ between 16,212, the past top in late 2021, and we are very close to the top of that, and now it does look like the NASDAQ's very likely to make a slight new high and join the other indices. But the Russell 2000 is still going to be 20% or more below its highs and very unlikely to confirm this. And that says that we ought to be making a major top here. So until things get more clear, 16,212 or a little higher on the upper end of the NASDAQ, and the last support in late 2022, 10,088, okay? That's a 38% range. That the markets could just go in that range up and down for a long time. I don't see how we make new highs again with this tightening. Obviously going to continue to hit, but until we break through and make new lows and start to get investors scared, there's no question that investors are acting like and should be acting like the Fed's got your back no matter what. And people were recently expecting they could be cutting rates again as soon as March. Why would they cut rates that soon after tightening into July of last year? Of course they wouldn't do that, and they're not going to do that. But now they're assuming June. So we'll see on all that. S&P 500, even tighter range between about 3,600 on the downside to 5,200, a little higher than we've been here. You may get slight new highs. But again, I think we're just in a range-bound market until something goes wrong and the markets start to take back over now that the Fed has tightened, and we break out of this range. Until we break out of this range, there's no reason not to keep going sideways. So don't expect significantly higher highs here, and don't expect lows unless we can break. Again, 10,088 is the number I'm focused on. I'm most watching the NASDAQ, the lead overall market index to me in this tech-driven world. So look, this is insane that the central banks could keep markets that literally should have peaked 2007 longer term, or at best a little higher when the 45-year technology cycle peaked around late 2019. Even that period, so you had two things going: demographics down, and the stock market is most correlated with that, back to the 1950s, as far back as I can measure. But that we did have that positive technology cycle, but that has been down since late 2019. So again, something has to give here. Bet on this range until we see it break. And of course, I'm just going to keep people updated more than ever. I cannot wait for us to get back to normal markets that go up for real reasons and down for real reasons and are not literally forcefully prevented by massive stimulus from ever taking a major correction or the economy ever taking a rest and having a real recession again. We are going to get one sooner or later. And again, the highest chance is that this happens by early next year, that we actually do fall into recession, even though the same indicators that said a year ago recession by now are saying, oh, maybe not. Look, everybody's confused. No indicators work. This market has been perverted beyond anything ever seen in history and probably ever to be seen again. But it is going to take a failure in this never-ending stimulus policy. It is going to have to fail hard enough for people and investors to lose confidence in this strategy, because we have to admit, and I have to admit more than anybody, this thing has kept going longer than I would have thought, or anybody I know would have thought possible, for an economy to live on stimulus alone now for 14 going on 15 years. And on top of that, they doubled down during COVID and the biggest 2-year stimulus ever. And now that's wearing off. And so if we don't see, with that wearing off and this tightening hitting, if we don't see the economy start to feel it in some major way, then we're just in some new era that we'll have to reconsider altogether. But I'm just saying, be patient, be on the safe side. It's a great time to be out of markets. The upside is limited here. The downside ultimately is way larger, especially if we finally break that 10,088 level convincingly on the NASDAQ. That's when I think people start to see, oh, okay, they can't do this forever, because again, they have done it forever so far. So I will keep you updated.